Every weekday afternoon, in an office in New Jersey, a small team of people publishes a number. No law creates it. No government agency signs off on it. Nobody votes on it. It goes out to paying subscribers. It lands in inboxes across the food industry. And by the next morning, it has quietly decided what a very large number of Americans will pay for a dozen eggs. You have never seen this number. You have almost certainly never heard the name of the company that writes it. And for more than 100 years, that has been the entire point. Here's the thing most people get wrong about the price of food. You picture a supermarket buyer sitting across a table from an egg farmer, haggling. One of them wants more, one of them wants less. They meet in the middle, and that middle becomes the sticker on the carton. It feels like how a market should work. Two people, one price, a handshake. That is not how it works. Not even close. What actually happens is that a huge share of the egg business in America runs on contracts that don't contain a price at all. They contain a formula. The formula says whatever the published quotation is on the day we ship, that's the price, plus or minus an agreed adjustment. Neither side negotiates the number. Both of them agree in advance to accept whatever number somebody else publishes, which means the entire fight over what an egg costs isn't happening in a supermarket. It's happening upstream, around the number. And in June of 2026, the United States Department of Justice accused 3 of the largest egg producers in the country of finding a way to lean on it. Let me back up because the mechanism here is the whole story, and if you don't understand the mechanism, the rest of it just sounds like the usual noise about greedy companies. The company that publishes the number is called Urner Barry. It's a business publisher. That's genuinely what it is. It reports market news and prices to people in the poultry, egg, meat, and seafood trades, the way a trade magazine would, except the thing it publishes has teeth. Its egg quotations have been the industry benchmark for over a century. It puts out daily prices, broken down by region, Midwest, Northeast, Southeast, Northwest California, South Central, and broken down again by the size of the egg. Large, extra large, medium. So how does a publisher decide what an egg is worth? It gathers information. Some of that information is completed trades, actual sales, where actual eggs actually moved. Some of it comes from a platform called Egg Clearinghouse Inc., where buyers and sellers post what they want. And some of it is self-reported, companies telling the publisher what they sold and for how much. That last category deserves a second of your attention. Self-reported means exactly what it sounds like. The publisher is not standing on the loading dock counting pallets. It cannot be. Nobody can audit a national market in real time. So the people whose prices are being measured are also, in part, the people describing the measurements. That isn't a scandal. It's the only arrangement that could physically exist, but it does mean the whole structure runs on a quiet assumption about honesty. And it's worth knowing that the assumption is there. Then analysts look at all of it and estimate. They work out region by region, roughly where supply and demand appear to be crossing, and they publish that. Now hold on to one detail, because everything hinges on it. The quotation doesn't only count sales. It also counts bids. A sale is a thing that happened. Money moved, eggs moved, it's real. A bid is a thing somebody said they'd like to do. It's an intention. And here is the uncomfortable property of intentions. They are cheap. A sale costs you a truckload of eggs. A bid costs you the 2 seconds it takes to type it. That gap between what a sale costs you and what a bid costs you is the crack in the machine. On the 29th of June 2026, the Justice Department, joined by 17 states, filed a civil antitrust complaint. The defendants were Cal-Maine Foods, Versova, and Hickman's Egg Ranch. The window in question ran from June of 2022 through March of 2025, nearly 3 years. The allegation was not that they got together and agreed on a price. It was subtler than that and, frankly, more interesting. The complaint alleged that they coordinated their bidding on that clearinghouse platform in a way designed to push the published quotation upward. The complaint laid out how. 4 moves. 1 was volume. Submit a lot of bids. Not because you want the eggs, but because a screen full of bids looks like a room full of hungry buyers. It manufactures the appearance of strong demand. Another was timing. Put the bids in just before the publisher takes its reading. Because a quotation is a photograph. What matters is not what the market looked like all day. It's what the market looked like at the instant the shutter opened. Then comes the move that gives the whole thing away. According to the complaint, some of those bids were unlikely to result in an actual sale. Worth slowing down on that one. These weren't bids that happened to fail. They were bids built in a way that made them unlikely to turn into anything. A bid that isn't really trying to buy stops being a purchase order and becomes a message. And the audience for that message isn't another egg company. It's the analyst holding the camera. And the fourth was that some trades did go through at a premium. A handful of real deals at high prices sprinkled into the mix to make the high numbers look earned. Put those four together and you get something that behaves like a conversation without anybody having to say a word out loud. Nobody has to pick up a phone. Nobody has to write an email that a prosecutor can read back to a jury. You just bid in a certain pattern at a certain time, and the number moves. Now, why would that be worth doing? Because of the contracts. Because so many retail agreements incorporate that quotation by reference. Push the benchmark up by a small amount, and you haven't just changed the price on one truckload. You've changed the price on every shipment under every contract that settles against that benchmark everywhere in the country for as long as the number stays up. That's where the money is. You don't have to sell a single extra egg. You just have to move the number that everybody else already promised to obey. And I want to show you how that promise is actually worded. Because the contract references the quotation sounds abstract until you see the shape of it. A supply agreement of this kind typically doesn't say $12 a case. It says something closer to the published quotation for large eggs in this region on the date of shipment, minus an agreed discount. That discount is what the two parties fight over when they sign. It might be a few cents. It might be a percentage. Once it's settled, it tends to sit there for the life of the contract. So the negotiation happens once over the adjustment. The price happens every single day over the benchmark. And only one of those two things is inside the room. That's the accusation. Now I want to be very careful about what happened next because this is where most coverage of this story goes wrong and where the truth is more useful than the outrage. Nobody was convicted. Nobody admitted anything. The complaint arrived with the settlement already attached. Same day. The Justice Department filed the case and simultaneously entered proposed consent judgments with all three companies. That's a civil resolution. There were no criminal charges. And every one of those three producers resolved the matter without admitting liability and without admitting any wrongdoing at all. So, what did they agree to? $3.3 million total split among the participating states. Cal-Maine, $1.5 million. Hickman's $1 million. Versova, $800,000. Plus a donation of roughly 53 million eggs to food banks and nonprofits. And then the part that isn't money, which may matter more. All three agreed to put antitrust compliance programs in place and to accept a broad ban on certain kinds of communication with their direct competitors, a restriction wide enough to cover most correspondence about pricing and bidding strategy. Hold that number, $3.3 million. $3 million. We're going to come back to it, and when we do, it's going to look different. Because before we get there, there's a part that complicates everything. And leaving it out would be dishonest. The price of eggs really did explode in this period. And there really was a reason. Since 2022, highly pathogenic avian influenza, bird flu, has hit more than 166 million birds in the United States. 127 million of those were laying hens. That's not a rounding error in the flock. That's the flock. And when a case is confirmed in a commercial house, the response isn't to isolate the sick birds. The whole barn goes, every hen in it, healthy or not. A single facility can hold millions. So a single confirmation can erase, in a matter of days, more laying capacity than most countries have in total. And a hen you cull today is not replaced next week. You need a chick, and then you need about 5 months before that chick lays anything. The shortage arrives instantly. The recovery arrives in seasons. So, yes, there was a genuine, brutal, well-documented supply shock. The retail price of eggs in the United States hit an all-time high of $6.23 a dozen in March of 2025. That is the Bureau of Labor Statistics number. real. Anyone who tells you the price of eggs went up because of a cartel is selling you something. The birds died, 127 million of them, and that is not a narrative device. There's a second piece of this that I think gets missed, and it shows you something about where the pain lands. Watch what happened on the way back down. Between March and April of 2025, the wholesale price, what the volume buyers pay, fell from $5.33 a dozen to $3.74. Call it a 30% drop in a single month. Over that same stretch, the retail price you actually pay went from $6.23 to $5.12, about 18%. By May, it had worked its way down to $4.55. So the wholesale side collapsed by 30% in a month, and the shelf gave back 18. The reason isn't sinister, and I'm not going to pretend it is. Retail contracts are struck ahead of time. Stock sitting in a store was bought at last month's price, and repricing a shelf costs labor. It's the same asymmetry in almost every product you buy. The shelf sprints upward and limps back down. But hold that next to everything else here. If the benchmark is the thing that ratchets the shelf up quickly and releases it slowly, then the benchmark is not a neutral thermometer. It's a lever with a longer arm in one direction, which is exactly what makes it worth pushing. But here's why the case still matters, and it's the part worth carrying out of here. Both things can be true at the same time. A real shortage and a pushed benchmark are not competing explanations. They're compatible. In fact, a real shortage is the perfect cover for a pushed benchmark. Because when the number is climbing for legitimate reasons, nobody looks twice at a number that climbs a little faster than it should. The noise hides the signal. If your defense is prices were rising anyway, a rising market is exactly the environment in which that defense writes itself. And notice what the Justice Department did and did not allege. It did not allege that these companies caused the egg shortage. It didn't allege they invented the price spike. The allegation was about the benchmark, about the number, about the instrument, not the weather. Now let's do that arithmetic I promised you. Cal-Maine Foods is a public company, so its results are not a matter of speculation. In its 2025 fiscal year, Cal-Maine reported net sales of $4.3 billion. That was up 87% from the prior year. Net income, profit, after everything, came in at $1.2 billion, up 77%. Their average selling price per dozen went from $1.93 to $3.13. For conventional eggs specifically, from $1.73 to $3.49, roughly double. And on the cost side, in that same year, feed costs per dozen produced fell 11% down to 49 cents. Selling price roughly doubled. The single biggest input got cheaper. I want to be precise because precision is the only thing that makes this worth saying. I am not telling you those profits came from the conduct in the complaint. Nobody has established that. The bird flu explanation is real and documented and sufficient on its own. What I'm doing is putting two public numbers side by side and letting you hold them in the same hand. $1.2 billion of profit in one fiscal year. $1.5 million paid to settle. That's 1/8 of 1%, 0.125% of a single year's profit. Turn that around and look at it from the other side of the table. If you're running a business and someone tells you the downside of a given course of action is roughly 1,000th of 1 year's earnings, with no admission of guilt, no criminal exposure, and no individual named, what exactly have you been deterred from? That's not a rhetorical flourish. It's the actual policy question sitting in the middle of this case, and it is a much better question than are eggs a scam? And it's not the first time this industry has been here. In 2023, a federal jury found that Cal-Maine Foods, Rose Acre Farms, and two industry organizations, United Egg Producers and United States Egg Marketers, had taken part in a conspiracy to restrict the supply of eggs. The period was October 2004 through December 2008. 20 years ago, the jury awarded $17.7 million, which under American antitrust law gets automatically tripled, taking it to around $53 million. Two details about that verdict that you should have. First, and I think this is the most quietly revealing fact in the entire story, the plaintiffs who won were Kraft, Kellogg, General Mills, and Nestlé, enormous food manufacturers. The money went to companies that buy eggs by the tanker. Not 1 cent of it went to a person who buys eggs by the dozen. The people with the standing, the lawyers, and the patience to chase this for 15 years were not consumers. They were other corporations. Consumers in the machinery of this are not really participants. They're the surface the cost lands on. Second, and I want to say this clearly because the story is more honest with it than without it, Rose Acre Farms publicly disagreed with the verdict. They pointed out that two earlier juries, looking at these same underlying issues with different plaintiffs, had ruled in favor of the defense. Two juries said no. One jury said yes. It went to appeal. I'm not telling you that to be balanced for the sake of it. I'm telling you because it's the fact that shows you how hard this stuff is to prove. 3 trials, same conduct, and the juries split. When people ask why enforcement in this area is so slow and so rare, that's your answer, right there. So let's widen the lens, because the egg is not the point. The egg is just the example that got caught. And it's worth asking why any of this exists in the first place, because private price publishing sounds like an oddity until you understand the problem it solves. Picture a commodity with no central exchange. Thousands of producers, thousands of buyers, deals struck privately all day long, all over a continent. A farmer in one state has no way of knowing what a buyer 3 states over paid this morning. Neither does the buyer. Everybody is trading half blind, and the person with the best information wins every negotiation by default. Into that vacuum walks a publisher. It collects what it can, applies judgment, and prints a number. Suddenly the farmer has a reference. So does the buyer. Both of them can tell whether the deal in front of them is roughly normal. That is a real service, and it genuinely made those markets fairer than they had been. But look at what happened as the practice matured. The reference stopped being something people consulted and became something they signed. It went from information to infrastructure. And the moment a number becomes infrastructure, the incentive to influence it stops being theoretical and starts being worth actual money. Nobody designed that transition. It just accumulated contract by contract over decades, which is how most of the load-bearing parts of an economy end up where they are. Urner Barry doesn't only publish eggs. That same style of privately published benchmark runs through poultry, meat, and seafood. And this way of setting prices isn't an American peculiarity. It's how a startling amount of the world's food trade works. In Germany, the reference for eggs comes from an outfit in Bonn called Marktinfo Eier und Geflügel, MAG for short. It's a market information service, and it belongs to a publishing house. Here's the part I found genuinely surprising when I checked it. Within the European Union, there is no official price determination for eggs. There isn't one. The gap gets filled by private surveys conducted by people in the industry, and MEGs are among the most significant. In November of 2025, its quotation for barn eggs Class M stood at €18.73 per 100 eggs, around 24% above the year before. By January of 2026, it was running about 30% above the year before. In Italy, they solved the same problem in a different way. And it's the version I find hardest to stop thinking about. The national egg price is set by a commission that meets at the commodity exchange in Forlì. It's called the CUN. 10 commissioners representing sellers, 10 representing buyers, evenly balanced. They sit down every Monday at 11 in the morning, and they formulate the indicative prices for the following week. So in Italy, next week's egg price is agreed in a room in advance by 20 people on a Monday morning. In France, the weekly quotation is published by an agricultural press group. In Spain, the weekly quote from a livestock exchange in a small Catalan town called Belpuig feeds into the official reference price calculated by the Agriculture Ministry. Look at the pattern. In every one of those countries, the answer to who decides what an egg costs is not the government and not the supermarket. It's a publisher or a committee or an exchange, private or semi-private, mostly invisible and load-bearing. I want to be careful here too. Nobody has accused MEG or the commission in Forlì or the French quotation or the exchange in Belpuig of anything. There's no allegation of manipulation in any of those markets that I'm aware of, and I'm not making one. That's not the point I'm making. The point I'm making is structural, and it's this. We have built the price of a basic food on top of numbers that are produced privately, published commercially, and obeyed contractually. That arrangement can be perfectly honest and still be fragile. And its fragility has now been described in detail in a filing by the United States Department of Justice. Because think about what the American complaint actually demonstrated, regardless of guilt. It demonstrated that the machine has a known input, bids, that is cheaper to produce than the thing it's supposed to represent. That is a design property. It didn't stop being true when the case settled. And ask the question that follows. Every one of these systems takes reported information from the very companies whose prices it's measuring. That's not a flaw somebody snuck in. It's the only way any of it can work. Nobody else knows what the trades were. The publisher can't audit the market into existence. It has to be told. Which means every one of these benchmarks in every one of these countries rests on the assumption that the people being measured are describing themselves accurately. Usually they are. Almost always, probably they are. But the egg case is what it looks like when the Justice Department says out loud that maybe for about 3 years, in one market, they weren't. And the honest thing to say, that's in school, the only honest thing, is that we do not know how many other numbers are being leaned on right now because there is no mechanism designed to find out. The 3-year window in this complaint wasn't uncovered by the system catching itself. Somebody had to go looking. So here's where I'll leave it. The next time the price of something ordinary moves and everybody reaches for the obvious explanation, the weather, the war, the virus, the shortage, the obvious explanation is usually right. It was right here. The birds really did die. But underneath the obvious explanation, there is almost always a number. And that number was written by somebody. In an office, on a deadline, using information handed to them by the people the number is about. Nobody teaches you that number exists. It doesn't appear on the carton. And until a government filing drags it into the daylight, you can go your entire life buying the thing at prices and never once wonder who wrote it. Now I'm curious about your side of it. Wherever you're watching from, do you have any idea who publishes the price of the food in your country? Because I'd bet most people don't. And I'd bet the answer is more interesting than any of us expect. Tell me where you're watching from and what you find.